Hi, everyone. Welcome back to Beyond the Box, a podcast where we talk about the big topics shaping global trade and logistics. I'm Cecilia Larson, and it's great to have you with us.
And I'm Hao Kwong. Today, we're diving into geopolitics and how it's reshaping supply chains around the world.
That's right. Supply chains connect everything we do, but the world is changing so fast, and businesses are dealing with big challenges and new opportunities.
So, to help us dig into this topic, we're excited to welcome two guests with a finger on the pulse. First, we have Tony Fondavilla, who leads MER's global automotive vertical. Welcome, Tony.
Hi, everybody. Hi, Cecilia. Nice being around. Thank you for inviting me. Looking forward to today's podcast.
And we're also joined by Neil Ashby, Mast's global vertical head for retail. Neil, thank you so much for being here.
No problem. Thanks very much for inviting me.
So, let's get started. Over to Tony, firstly. We want to open up a bit more broadly. We'd love to hear from you some of your predictions on the trends you expect to see within the auto industry in 2025.
Okay, so I haven't brought my crystal ball today, but one of the things that we can see is that a continuation of the mega trends. Yeah, so vehicles, automotive, cars are going to be what we call ACE. Yeah, so it's autonomous, connected, and electrified. Those three mega trends are going to continue in each and every region, probably different levels. But I will add a P at the beginning. It's going to be pace. That is polarized. We are going to see some polarization that is going to reflect the overall economy on the geopolitics. And we're going to see more concentration of different models, different supply chains, even within the different regions. That is what we expect for the upcoming, I will say, months or even years, which is not only ACE, but pace. Yeah?
It's very interesting. And in terms of, you just mentioned some of the regions. What are some of the regions that are going to see some big changes this year that you expect?
Europe is going to be a great battleground for automotive. We are going to see a lot of fierce competition, electrification ramping up, newcomers into the game, how the traditional OEMs are going to defend themselves, how is the whole industry going to reshuffle and readapt to the demand. So it's really looking interesting this year.
That is very interesting. Thanks, Tony. Moving to Neil, do you foresee similar developments for the retail industry, or are there sort of other trends that are dominating and coming this year?
Well, I think within retail, we're all consumers ourselves, right? So we see and actually create the trends that we're seeing. So the biggest element that is impacting retail and also us as logistics providers is the rise or continuing rise of the omni-channel requirements, right? So there are more ways of shopping than ever before, which does add complexity to supply chains. So we all shop either bricks or mortar. We still like that. We like to go online. We like to go backwards and forwards. It's more and more complex. The other element is that we as consumers are becoming more and more demanding. We like to have personalized buying journeys that are simple, seamless, that have purchase or payment options, delivery options, return options. It all creates a lot of complexity for us retailers. The element of value has always been there, but I would say particularly it's not just about having low price or low cost. It's also about having quality and durability of the product. So that is vital. And then we have the element of sustainability, which both from a legislative but also a consumer-led basis, it's becoming more and more important for retailers to have the right offering. But how do they do it and also cover the costs associated with it? Because in retail, margins are thin and not all consumers are willing to pay for that. So there's a load of elements in there that's moving, that are the trends that we see and that also have an impact on us as logistics providers.
Well, that's a very comprehensive answer. And yeah, you're right in terms of there being so many options for consumers. That brings a lot of complexity for businesses, obviously, having all these options available. What are some of the things that we're seeing businesses do to adapt and to provide these options, but also simplify the solutions at the same time?
So I think one of the elements that they do is they're trying to de-risk and increase their resilience. So that could be anything from diversifying their supply. We'll talk a little bit about nearshoring soon, but basically diversification, it's about having having the visibility to make sure that they control their inventory, use the data that they get, because retailers never had so much data, quite frankly, as they do now from all of these buying journeys and the technology around. Use that also within their supply chain in terms of demand forecasting and basically improving the efficiencies within their supply chain. So that is what we see, and that's what we're trying to support our customers with.
That's really fascinating. And actually, I'm really looking forward to diving more into that in a bit. Just grabbing onto something that you said before, Tony, you were talking about the geopolitics of it all. How do you see global geopolitics shaping the auto industry this year? I'm especially within auto thinking here about supply chains, market access, and regulations.
Clearly, we don't know when the next big event is going to happen. I wish that we can probably predict or pre-visualize when the next thing is going to happen. But, we have clear examples or signposts that we are seeing those days. The recent elections in the U.S. and administration applying tariffs for imports, for example, protectionism all around Europe as well. We are seeing the Suez Canal situation. Those are clear. Today or this week, we have these big issues, big problems in Congo that, for example, can affect the mineral extraction and mining extraction. So Congo is a very rich country in these terms and will potentially affect all the battery supply chains, for example. So we are seeing in this situation in the automotive industry that the butterfly effect, the typical or the traditional butterfly effect, whatever can happen anywhere in the world will affect someone. Yeah. And this is what we are seeing. Obviously, there are big changes like the administration in the U.S. that it can have an effect that has happened, for example, in Europe. I remember last year, before the European Commission applied tax or taxations to Chinese manufactured cars, that there was a huge amount of increase of imports into Europe that nearly collapsed most of the harbors in Europe because of the finished vehicles there. We can see similar situation this year in the US, in Europe, even in Southeast Asia as well. That we are going to see how the different flows are going to be reshuffled. So I expect this year a lot of changes in the flows that we have been traditionally looking at, and that is mainly provoked or forced by the geopolitical situation around it.
Picking up on what you just said, both about the batteries and the geopolitical situations kind of impacting. Do you foresee us seeing what we kind of saw with the chip issue under COVID, where some automobile companies were able to reuse and redesign their way of working? Do you foresee that happening again?
Chip shortage was a big issue, but I think the industry learned from that. However, we are still very much dependent on Taiwan, and Taiwan is still there. Yeah, so Taiwan is still a situation in geopolitics that we should have a look there. But we have seen last week, about this AI situation, for example, with DeepSeek. Yeah, someone creates something new, all the market collapse because someone has done completely different. Yeah. So it's a little bit of uncertainty and volatility that we are seeing in the stock exchange, in the stock market, and as well in the economy around that is affecting also the consumer behavior. Should I move from the traditional internal combustion engine and start buying a new technology that I don't have the clarity, I don't have the visibility of this is going to be the technology that is going to be implemented in the future? Yeah, so we are as well expecting solid-state batteries. What is going to happen with all the lithium-ion batteries that we have been producing and sell till today? What is going to be the value of those used vehicles moving forward? But there's a lot of uncertainty in the market that is driving a lot of consumer behavior on one hand, on one side, or one direction or the other. Yeah?
That is so interesting. Neil, now, just listening to what Tony said, I'm sitting here thinking about how also retail is kind of being impacted by geopolitics. And I mean, like you said, retailers are consumers as well as being sellers. So how do you think that 2025 is going to look? Are they going to have to adapt to a more fragmented and an even more dynamic global landscape? Or do you think things will be easier for retailers in the coming year?
And I certainly don't think it's going to be easier for retailers or for anybody. I think historical evidence suggests that times of heightened geopolitical result in less consumer confidence, in rising inflation, and basically that just impacts retail sales negatively. That's what the data shows over studies. So I think you can break it down here for retail, like any other segment, into the tariff issue. So trading in goods there was a term I read the other day, has been weaponized to some degree, right? So it's part of a power play by various entities as the old world order fights to contain the new world order. So then tariffs become a power play, politics rather than economic. But what will it mean for retailers? At the end of the day, tariffs will mean higher costs. It means inflation. It means less disposable income for consumers. And retail sales down. The other element is, as Tony already alluded to, so we've seen what the Red Sea situation does. It extends lead times, it increases costs, adds complexity, and who knows where the next one is. Is it Panama? Is it Taiwan? Those are the ones that we can see that people are talking about. And the consequences, I mean, they go on and on and on, and it's very hard to contain that or even envisage what that might mean. But it will be significant, right, if it is those. So what other consequences could be for retailers? They would have to probably de-risk. They have to try and plan those scenarios. It's quite hard to scenario plan for a blockade of Taiwan or a Panama Canal closure, etc. But yeah, those are some of the things. I don't think it's going to get easier in 2025 to predict or to manage.
That's super interesting. Thanks, Neil. I just wanted to, Tony, dive into a bit more on manufacturing strategies and geographies. So we know that geopolitics greatly influences supply chains, particularly where businesses locate their manufacturing. What sort of changes are you seeing in the auto industry, and how do you foresee this impacting global supply chain?
I guess the question is it's about sort of a relocation or nearshoring or in manufacturing. Obviously, that is happening, yeah, and taxation tariffs, import tariffs are facilitating the redeployment or relocation of manufacturers from one side to another. Also, the geopolitics, yeah, and the friendships, the poles that we are seeing in the economy, yeah. So we're seeing, for example, we mentioned before about Chinese manufacturers setting themselves in Europe. That is happening and will continue happening in Hungary, in Spain. And will continue to evolve there. We see a lot of activities being moved from China into India or into Southeast Asia to serve not only countries or the big markets like the US and Europe that potentially can have sort of a stagnation in the upcoming years, but also the local markets. Yeah, what we can see is that this geopolitics affecting the relocation of factories. First, it's not going to happen overnight, yeah, because the economies are so dependent as we speak that this is not going to change tomorrow. Yeah, it will take time. It's clear that we are seeing, referring to our first conversation this early today about the signpost, that some of the factories or some of the big OEMs and tier ones are thinking about setting the new factories in, let's say, free ensuring, let's call it this way, yeah, and trying to make that in a safer or more reliable supply chain on one hand, and the effect that can happen as well is that we are going to see a multiple economy popping up. Yeah, we can see that if we redeploy or reshuffle manufacturing, in this case from China to Mexico, for example, to Morocco, North Africa, to serve the Euro market, to Southeast Asia, etc. So we are going to see a lot of not only nearshoring, but also multipolar economy growing up. Today, we have in one pole or two poles, but we see that this can happen, that we are going to see the appearance of a multipolar economy, and mainly manufacturing economy. Some new manufacturing hubs in India, in Southeast Asia, in Mexico, in North Africa, South Africa. Yeah, this is something that we can potentially see very closer than people believe.
Yeah, I mean, that's definitely happening, and we definitely see the trends moving in that direction, as you mentioned. Just a follow-up question, Tony. How can working with an integrated logistics provider help with this transition in this complicated?
The supply chain is not anymore about the super big volumes, the transatlantic or the trans-Pacific, super big vessels, super big volumes. It's about being closer to the customers. It's about working together in partnership, wherever the economy goes, wherever the market goes, and trying to support the customers where they need us. So that is why an integrator of the supply chain like Maersk can easily serve the customer needs, not only the OEM in this case, but also the end customer, and being closer as possible to the manufacturer, closer as possible to the retailer that help those goods to come across will definitely be a benefit. So I see that an integrator being able to control the whole supply chain, not only the big strings, but also the intra-area or intra-regional supply chains will help very much the customers. Yeah, so both with planes, vessels, shed, trucks, train, all what we are developing in the last years.
Thank you. And over to you, Neil. Similar sort of topic. We see many retail brands choosing to source, produce, and sell products near each other geographically. So is this nearshoring trend the answer to some of retail's biggest challenges?
So I think if you take the apparel and footwear segments, then yeah, we've seen nearshoring going on for some time. And that's probably originally for lead times because it's related to fashion. So you want to get, ahead of the game. So that I think we've seen. Outside of apparel and footwear, we haven't really seen retail, let's say, explode in terms of nearshoring. We see a little bit in home furnishings or home improvement. We've seen that in Mexico by some big US retailers, but still by far well above the 90% of sourcing is done from the Far East. I think within retail, there is a move, and that has been going on to which they call China Plus One. So yeah, still source the majority from China because I don't know about impossible, but in the short term, it's impossible to compete with China for capacity and the cost, and the overall infrastructure that they have. But of course, particularly in the US, because of trade tension, there has been a movement to find a different source, so multi-sourcing. It's not so much near sourcing. We do see that in Europe. Still, we see huge growth of imports from China, so that's not necessarily slowing down. There is obviously near sourcing going on in Central and Eastern Europe, but that's mainly around pharmaceuticals, automotive, and the tech IT segments rather than retail. So I would say it's happening. Would it answer some of the problems? Of course, you would reduce emissions. You would get your inventory closer to your consumer market. But then it does actually add some complexity. If it doesn't go well, it can add cost. And let's not forget that some of the raw materials for these goods still have to come from China. So then you're sort of moving the manufacturing. Retailers are not manufacturing, they're buying from someone else generally. So it's not something that we see, I would say, necessarily outside of the apparel and footwear segments.
Yeah, that's a really good point. You mentioned some of the challenges with nearshoring and some of the risk. Could you maybe expand a little bit more in terms of what some of the risks that businesses need to consider if they plan to shift to nearshoring as one of their options?
So you've got to make sure you've got a labor force which is big enough and has the right skills. You've got to make sure that they have the right cost picture. Nearshoring in a Mexico or Central or Eastern Europe will be cheaper in terms of labor cost than in Western Europe or in the US, but it's still not as cheap from a labor cost perspective as, say, Southeast Asia. So there's a cost element. You add complexity, right? Retailers, if they're buying big and have scale and have procurement advantages from single source out in, say, China, where they've been working for years. Suddenly, if you split your supply chain in two and your procurement and your scale, economies of scale are reduced. So there are those cost elements, but the complexity, I think, is one where you've been used to holding inventory, close to market and maybe having a buffer, which can be expensive, but you're sort of used to that. And maybe better the devil you know for some of these guys. And margins are paper thin in retail, right? So they don't want to take that risk, perhaps, which is why we see it more slowly in retail outside of apparel and footwear.
It's very clear that 2025 will be an interesting year for sure.
Yes, rock and roll.
Going to bring some challenges and hopefully also a lot of opportunities for everyone working within both the auto and the retail industry, but hopefully also for other businesses. And that wraps up today's episode of Beyond the Box. A big thank you to our guests, Tony and Neil, for joining us and sharing your insights.
Thank you.
Thank you. Please join us again for the next episode, where we'll continue exploring key trends shaping the future of logistics and supply chain management. And finally, if you enjoyed this episode, be sure to leave a rating and subscribe. Thanks for listening.